CPI data came out this morning, and we got a lot to talk about. Let's do it on Today in Mortgages. Hey, what's up, everybody? Welcome back to the show. We're talking about what's real, what's hype, and what you should actually be paying attention to out there in the world of mortgage and real estate news. It is Today in Mortgage, and Rich, we got a doozy today.
Man, just can't get a break sometimes, just when we feel like things are moving in our favor.
We had a lot of optimism coming into the report. I mean, a lot of things out there in the market. People were thinking this is a good month, and we kind of got opposite data on what we were expecting. Rich, real quick, tell us kind of if everyone was hiding under a rock this morning, what happened with CPI data?
Well, CPI came in, at 3.1 when it was expected at 2.9. Some of us may say, oh, it's a couple of ticks. It's no big deal, but it is a big darn deal because it represents a big number. So when you're expecting it to come in lower and it comes in higher right now, ugh.
Yeah, it was rough. Markets definitely responded. Obviously, the stock markets kind of saw that and said, ooh, this is not going to be good. There was a big sell-off this morning. Recovered a little bit, but more than that, it just pushes the expectation of rate cuts further into the future, and that is not good news for us, and it's something that we're all kind of frustrated with this morning, but there's not a lot we can do about it. But Rich, I pulled an article from Market Watch today talking about how the real data in housing and hotels is really kind of the key thing that is keeping inflation high, and in fact rose over the past month.
Right.
So what's really interesting about this is that there's kind of this push-pull on, gosh, we won't lower rates until inflation comes down, but the thing that's keeping inflation high is housing cost, which is driven by high rates and high cost of cash for builders and buyers. And so, it's a chicken and the egg type situation, and it feels like it might be, just an impossible thing to do. What are we looking at here, Rich? What do you think?
Man, it's tough for builders right now, right? Mm-hmm. They have to borrow funds in order to build homes, like for all of their supplies and labor and all that good stuff. And when those cost of funds are high, it's just passed on to the consumer. So we're not seeing a little break there until rates come down. So that therefore home prices continue to appreciate, which is great for existing homeowners, but it's not great for a first-time home buyer or somebody looking to buy a home today, because the prices keep, ticking up a bit. But listen, all of this stuff eventually works out. Now, what are the analysts saying? We're not likely to see any kind of Fed cuts in March or April. It's likely going to be May. I don't believe it's going to be any sooner than June, but we'll see, because you can see by the reaction this morning, it's a big knee buckle reaction to this number. I mean, the 10-year treasury is at 4.28 right before we started this video. And that's 10 basis points above what the ceiling had been before. So I think maybe we're going to digest this information and we're going to see a little reprieve tomorrow. And Michael, I don't know if you dug even further into the data, but that's a big number. And that's a big number because the consumers are still spending. Hot. But if you dig even deeper than that and look at what's happening, where is this spending coming from? In the fourth quarter of 2023, the average consumer debt increased $212 billion. And if you dig even deeper than that, you find that almost all of it was borrowed. Credit cards, installment loans, home mortgages, home equity loans. So we're not talking about consumers that are really comfortable and they want to, finance something because of a low interest rate so they don't use their savings. No, they're likely fried through their savings, done, and now they're using credit cards and other consumer debt vehicles to finance the spending, and that is not sustainable. So I don't foresee the first quarter of 2024 to represent those same numbers.
Yeah, it's going to be super interesting. Obviously, some of this could be revised down in the coming months. We have seen some, private analysts saying like, hey, these numbers are lagging indicators. What we're actually seeing in our own analysis of the market is that especially hotel costs have leveled out. Do not expect those to be as high as they should have. They are represented here in the CPI report. And also, we are seeing housing costs come down a little bit, but those rents are still high. So it's going to be interesting to see. Maybe this gets revised down a little bit, but altogether, it is not a great sign for what the Fed needs to see to get to that sustainable indicator that they're looking for, that Jerome Powell keeps asking for. So we'll see what happens, Rich. I know you and I are probably rolling out of bed this morning looking for good data this morning, and unfortunately, this put a few more frown lines on our forehead. But it is what it is. And, what we always preach here at Network Funding is that despite the market, we have to get out there and hustle. And so now is the time to be reaching into your database, reaching into your marketing reserves, and getting out ahead of all this and talking through it with borrowers and buyers to be able to let them know the advantages of buying right now. Rich, what are some of those advantages? This
Well,
pushes
right
that.
now, Michael, sellers are negotiating.
Yeah.
They're using concessions to help buyers buy down interest rates, temporary buy downs, and so it's there for you. You have those options if you're buying a home today. If you wait for interest rates to come down, all of those options go away, because then it turns into a seller's market, because you're going to have much more competition for that one home, and the seller just is not going to they're not going to have to do that stuff. So get out there. If you can afford a payment today, even at a temporary buy down option, I would do it today. Homes are continuing to appreciate, and you're better off buying today at a temporary interest rate that you're likely going to refinance anyway when rates drop, rather than wait for the homes to appreciate. So get the home today.
Yeah, we just came off, Rich, you and I, our annual President's Club. We talked about this kind of ad nauseum in our roundtables, just like communication, giving options, educating your borrowers and your even real estate agents out there on how we can get around this market and really benefit the borrowers and the buyers long term in their financial success as they look to get into a home. And so that was something interesting we talked about. We're talking about this kind of stuff all the time inside the network. If you guys are interested out there and learning more about what that looks like for you and how you can succeed and grow inside the best network in mortgages, click on the grow link below. We'll reach out and get you all the information you need to succeed. So, Rich, gosh, any final words on any of this?
None on the CPI, but I want to say congratulations, Michael David, our marketing director, as Employee of the Year. You were just awarded this during our President's Club, and I can tell you, most of you are just getting to know him through this podcast, but he is an incredible partner and a huge asset for Network Funding, because he provides a ton of marketing guidance and services for our people. So thank you, Michael, and congratulations, sir.
Well, appreciate that, Rich. Yes, it's a great honor. I'm actually wearing my President's Club hat today, even though it's messing up my lighting, because it was an exciting time and a lot of good stuff came out of the weekend. So we'll have more video and fun images coming of that soon. So follow us on the Facebook and the Instagrams and all the socials. And definitely reach out if you're interested to know more about the network. Until next time, guys, keep sending up those prayers for better CPI and economic data in the future. But until then, we'll keep talking to you on Today in Mortgages. Today in Mortgages is produced by Network Funding LP, which is an equal housing lender, NMLS 2297. The content of this program is meant to be a commentary on mortgage and real estate news, and any discussion of rates and or products should not be taken as an individual mortgage or home buying advice or pricing estimates. And any commentary on this show should not be considered a promise to make a loan. All applicants for a loan must qualify, and you should consult a professional regarding your individual loan scenarios for your financial situation. Visit our website at nflp.com/licenses for all state licensing and other legal information.